A record amount of cash in money markets right now on the sidelines, not being invested. Do you see that money coming off the sidelines anytime soon? And how does Jay Powell's news conference today, how could it impact that?
So I think it's probably a little bit early. What we're hearing is investors they're a little bit uncertain on what the path is ahead. There is so much volatility out there. That you've got the geopolitics, you've got a lot of questions around the interest rate path, as well as, of course, the recent increase in bond yields, which everyone is still kind of scratching their heads about what has really been the key driver. So until some of that narrative is very clear, I think you're likely to see people staying on the sidelines. But as soon as you have clarity, as soon as we know that the Fed, for example, has finished hiking, then I'd expect investors to come right back in. And for the Fed, as I said, it is key. But to be honest, today, I think it's going to be a bit of a non-event. We all know that the Fed is very unlikely to raise rates today. The focus is going to be on the press conference. What is Jay Powell saying about the recent increase in bond yields and what they believe to be the driver?
All right, so the rate decision may be a non-event. I think the consensus is just a pause. But we have another big event today, the Treasury auction. That's certainly going to be an event. Looking right now, $776 billion in debt being auctioned off. How do you see that impacting both the bond market and also the equity market? Again, yields on bonds also providing a lot of competition for equities.
Yeah, it's actually, typically we wouldn't even be talking about this kind of event. But this time, because the last release had triggered a lot of concerns about the amount of issuance that the market would have to absorb, that is believed to be one of the key drivers for the increase in yields recently. We've seen that spike. And also that spike is, of course, has been one of the impacts. One of the impact on that has been the equity market struggling to digest that increase in yields. So I think it is, you're right to say it is a big event. It's probably a little bit more important even than what you're going to see from the Fed today. So it is something that we're following. If you were to see a bigger auction size than expected and bond yields were to have another surge higher, then of course I think equity markets will be under some pressure.
All right, right now we're showing the very short end of the curve right now. Look at these yields, the 1 month, 5.4% yield. I want to ask you, when you're advising clients right now, is now the time to get into these short bonds, take advantage of it, or do you want to lock in the rates for longer, even though the yield's a bit lower?
I would say that, there is, of course, a lot of temptation to be on that very front end, as you said, that the yields are very, very high, especially from a historical perspective. But you do have the risk that that will end fairly quickly. If you're locking it in at the longer term rate, that is probably a good idea, because if you fast forward to about 6 months, 9 months time, the chances are that yields will have fallen a bit, because you're likely to see a bit of an economic downturn forming, maybe not recession, but certainly some kind of slowdown, as well as anticipation of potential rate cuts down the line. And all those things should be pressuring yields lower from a longer end. So we would actually say that maybe this is the time to think about longer duration rather than the short duration side.
Yeah, but it doesn't really seem like investors are thinking that way. As we mentioned, there's a lot of money just sitting in money market funds. So that has generally a lower yield than those short-term bonds. So in your mind, is there a big difference between being in a money market or a short-term bond?
Well, I think there's a couple of differences there, right? The reason that people are sitting in almost in cash and money market funds is because they're not sure about what the outlook is. So there's uncertainty. That is the reason that people are sitting in money market funds. Once you have got clarity, then I think there's going to be a rush in to not just longer duration, but certainly to the broader market. So we're thinking about equity markets. I think there'll be a lot of opportunities there. You think about real estate. So I think it's just a case of what is driving your rationale. But to be honest, at this point, it's time to be diversified, be invested, because when that turn comes, it will likely come pretty quickly.
Okay.
So there's uncertainty now, but it should be cleared up within the next few months.